What's up, legends? In this video, I'm going to talk to you about the significance of the high and the low of the day. Now, this type of subject belongs in the TBD system part 2, and I'm going to refilm a video for that later, but I just wanted to go through this now with you guys because this week has been a really good example of the significance of the high and the low of the day. So just to briefly go over exactly what the high and the low of the day is. The high of the day is the highest point that price went the day prior to the day you're trading between 5 p.m. New York to 5 p.m. New York. And the low of the day is the lowest point that price went between 5 p.m. New York to 5 p.m. New York the prior day to the day that you're trading. So when you see the Monday high and low of the day, that is actually the highest point that price went for the weekend. So the lines on Monday refer to price action on the weekend. The lines on Tuesday refer to price action on Monday. The lines on Wednesday refer to price action on Tuesday, and so on and so forth. Now, I've hidden all of the other lines on this chart so that we can specifically focus on the high and the low of the day. So you don't have the initial HOD and LOD, and you don't have the LOW and HOW on this chart. Just to be clear, that is intentional for the purpose of this video. Now, what I want to talk about is how you can use the high and the low of the day to give you an idea of what price may do the next day. I'm going to keep this brief, but I will go into it in detail in the proper part 2 of the TBD system. But essentially, there's a rule that you can apply. And before I tell you what the rule is, I want to stress that this rule doesn't replace all other rules. Just note that every time you learn something new about this system, that doesn't mean that you can forget everything else and solely rely on this one thing. All of these things, no matter what you're learning to trade, whether you trade this system or you trade somebody else's strategy or whatever it is, as you start to add the puzzle pieces together, they need to layer on top of what you've learned prior. So you can't just throw everything you've learned out the window and go, that's it, I'm now trading high and low of the day, all right? I just want to be clear about that. So let's focus in on this, because what I want to explain to you is how you can better use the high and low of the day to give you an idea of what that particular day may do. So some general rules about the high and the low of the day is day starts in that half-hour gap before Asia starts, just to be clear. So 8 p.m. New York, that's when the day starts. If the day starts and the price is at the high of the day, so the previous day's high of the day, and it does not break it, you can expect a down day that day. And I'll show you exactly where that is in a second. The next rule is the opposite. So if the day starts and price goes for the low of the day, you can expect that it's probably going to make its way up to the high of the day, and therefore you would be looking for long positions. The third rule is if price opens somewhere around about the middle of the high and low of the prior day, price is probably going to do nothing, which means that day is a scalping day. So for a lot of you, I know you are getting used to the idea of feeding up in time frames, and sometimes you want to focus on the 1 hour or the 4 hour because you think we're feeding up. This is actually a really good hint by looking at where is price at the open in relation to the prior day's high and low. That may give me an idea of whether I should scalp today, or is there going to potentially be a bigger opportunity today? That's kind of the focus of this particular lesson. The fourth rule also would be if price breaks a high or low of the day with volume, then you can expect a trend continuation. So those are the 4 rules of the high and the low of the day. Into that, we can layer in the volume range profile. Now, on your tools here on the side, you go to this one here, number 7 down, and click on the arrow, and it's this one here, fixed range volume profile. If you just star it, then that will add it to your little menu item thing here. And then anytime you want to use it, you just click on it. Now, for this purpose, what we're going to do is from the the dead gap zone. So from 5 p.m. New York to the close, so 5 p.m. New York, we're going to mark that price action for each day. So the highest point to the lowest point. So this wick here, 5 p.m. starts in the shaded area, so it's very easy to identify. So from this wick here, we're going to mark down to the lowest point the price went till 5 p.m. New York, so the next shaded area. And we're going to do that every day. So this is the shaded area. The lowest point price went was there. So we're going to go from there. The highest point it went was here and just to 5 p.m. New York. And I'm just going to continue this for the rest. Okay, now when we layer in this volume profile, in your settings, it should have the POC ticked, so the point of control. So if you want to double click on yours, just draw one, double click on it to bring up your settings, and just make sure that under style, you have POC ticked, and that will put that line across. You can color it whatever you want. So mine are all the red ones, right? So now the rule is, if you were to have a look at this price action, this up here is the high of the prior day. So because it's a Monday, it's the high of the weekend. This blue line here is the low of the day, so the low of the entire weekend. The red line is the point of control. This shows how much Bitcoin was traded within all of these price zones, as opposed to the volume bar that you usually get to the bottom. The volume bar at the bottom is showing you the volume increase in a certain time period, but this is showing you the volume increase in a certain price period, right? So you basically consider the point of control the most highly traded area, which can act as a support and resistance. Sort of the same theory, however, a lot more accurate. So the three things you need to know is the high of the day, the low of the day, and where's the point of control. And the way you would use this is once a session starts, so from 5 p.m. New York, you want to see where is the price trading closer to, the high of the day or the low of the day. And in this case, leading up here, it was trading closer to the high of the day. What you would look for at that point is a stop hunt. So you're looking for price to either try to break it and fail, which is what happened in this scenario. Let me zoom in. So we know this is false move week beginning, and the false move started with that stop hunt to the high anyway, but that would be scenario one. Scenario two would be, does price break the high of the day with an increase in volume, which is this volume bar down here? See how the volume decreased? That is your hint that this is a stop hunt as well, and that it's not going to break the high of the day in this case. So if it were to break, you want to see the volume increasing to give you an idea that they're going to break this and send price higher. So we had a volume decrease, we had a failed attempt to get above the high of the day, and we also knew that it was false move week beginning. So then price starts to head down. Now, because we're looking at this price action right here, and we know where the high and the low of the day is for the day prior, we also need to know the point of control for the prior day, because whilst we see this point of control right here, this hasn't developed yet because this is based off this price action, and we're talking about this period of time here. So I'm going to add in the point of control for the weekend as well. And now we can see here that on the weekend, this level right across here, almost the middle, was basically the fair value for the weekend. And once we had that stop hunt to the upside, this candle right here immediately broke through it. And then we had this small little retest of it here. So if I extend this line out just so you can see what I'm talking about, you can see here, this is the break, this is the retest lower high, and then from there we fell away. Once it breaks the point of control here, the next test is it going to break the low of the day? Which of course, again, it did break the low of the day. This was a consolidation period under the low of the day, and then we eventually fell away. If you took the chance on the short in hopes that it was going to break the LOD, then that's essentially just a chance that you're going to take. Now on this one, you probably are going to assume that we would break the low of the day because we had already lost the point of control. Now, once price broke it and it went into that consolidation period, that became the next highly traded area. And eventually, once price makes its way back to there, it's going to be attracted like a magnet to that zone, which we will get to. As far as trading this day alone, if you didn't get that stop hunt entry, the fact that we broke the low of the day and then consolidated under it and failed to get back above it, that consolidation period there was your hint to take a short if you didn't get the stop hunt short. Now, now the new week starts, and you've actually, in this particular case, you had a very wide range. So when it comes to the next day, usually the rule is if price opens around the middle of the range, you're probably not going to have much price action that day. It's probably going to be a small range. But in this case, because we had a wide range on Monday, when price did open here, so 8 p.m. New York, remember half hour before Asia, it's in the actual gap of Asia, not Asia itself. If price is around halfway mark, you expect nothing, but it's not around halfway mark. It's very much to the bottom. And now we can see that as price opens on Asia, we are more towards the previous day's low of the day. So this blue line here is Monday's low of the day. And you can see that by these two wicks here, right? That's the lowest point the price went on Monday, even though now is Tuesday. This one up here is the highest point price went on Monday, even though today's Tuesday. So on Tuesday, you start your session and you're looking, where is my high and low of the day? Where was the highest traded price for yesterday and where was the lowest traded price for yesterday? And then where is price now in relation to both of those? So you can see that we're all the way down here towards the bottom end. So your key is either price is going to hold to the low of the day today, or it's going to break further beyond it. But if from here, so price was here, it's hard to see, but price was here when Asia opened, and you can see that you have a first peak potential W. So that would be your hint to wait either for a second side W that bounces off the low of the day or stays clear of the low of the day, or price returns there, breaks below it for continuation to the downside. That meant for the entire Asia, there's no trade to take, right? Because we're not breaking up and out of it. We're not breaking down below it. We're not creating W formations or anything like that. There's no point watching it. Set your alerts and go about your day. Then you come back in UK, at the start of UK, you have a look at what's going on, and again, it's still hanging around the same area. This area would be creating the next point of control. So until it shifts out of that zone, there's no trade to take. Better off coming back to have a look at the end of UK. There you've got a W right off the low of the day. It didn't break the low of the day, and you've got a hammer here on the second peak. So you could have taken a chance on a long position there, and you could also have considered that this was a multi-day W there as well. It wouldn't matter. The point is it didn't break the low of the day, and there's an aggressive entry down here. Now the next thing is we have to check the volume. So then when you check the volume, you can see, yes, okay, at this area here where it held above the low of the day, we had an increase in volume. That should give you confidence. If it broke the low of the day and had high volume, you'd be confident we're going down further, and that would be your trigger to short. But we got the volume that held the low of the day. So that's your trigger to go long, right? Now, in this particular case, unlike this day, we didn't get a retest, and that's what happened. So you've got to decide how you want to enter your trades. If you want to be more conservative and you want to say, nah, I want to wait for it to break the point of control, retest, then I'll go long, then you didn't trade today. You know, it really depends on your own rules. Now, these follow the two rules, right? If you're going to break a high or low of the day, there has to be an increase in volume at the break for continuation of the trend. If the increase in volume holds the level, we're probably going to have a trend change. So increase in volume held the low of the day, probably a trend change after a downtrend on Monday. Now we go to the next day and we do the same thing. So again, if price tries to break the high of the day but fails it, we're probably going down that day. And you can see here that 2 times price tried to break the high of the day right at the start of Asia. It failed with 2 magenta candles right there, and that's your hint that it's going to break down. Now in this case, because the previous day was also a highly volatile day, you had potential at the start of this day to think, wow, I might get another massive trade all the way back down to the low of the day. Again, you can't know in advance if it's going to be a huge trade. You just have to assess, where is my low if you're going to go short, where is my low of the day, and where's my point of control. Whichever is closest is the first kind of battleground that you need to break, right? So on this day, this point of control, it doesn't doesn't exist yet because price is here. We don't have this price action yet. So you're actually going by the point of control of the prior day, right? So your target for this could have been set, besides using vector candles, which they always come first, right? As you can see, especially in this case, the vector candle was a lot more accurate. We came down to this one. But if you're trying to stretch out a good trade, or you're trying to count 3 levels as a day trade, then you've got vector candles as a zone, you've got point of control, and you've got the prior low of the day. So if you had taken a short position on here, you would actually be aiming, if not for vectors, you'd be aiming for the prior day's point of control. Just like here, if you took this long position, because the prior day's point of control is lower than the low of the day, on this long, your initial target is going to be the point of control. That should have been your first target, low of the day second target, high of the day third target, right? That's how you would do that because they're closer to price as we're going up. On this day, the closest is, besides vectors, obviously they come first, just to be clear, but besides vectors, the closest thing is your point of control, then your previous low of the day. So in this case, you didn't end up getting a full trade based off those. You only got to the vector candle as long as you are including that in your trade plan. Now a new day starts. So on this day, we're looking at the prior day's point of control and the prior day's high and low of the day. So again, where did price open on this day? Did it open closer to the prior day's high or the prior day's low? It opened closer to the prior day's low. Then did it break the low with volume? No, it shifted away and it came back here to test it and it held it. So that's your hint that price is going to go up today. Now just remember, just because you can identify where price is going in a day doesn't mean it's going to be a good trade, right? So in this case, you would have identified, okay, we haven't broken the low of the day. We held it with a high low, probably going to go up. Your target may have been up here to the high of the day. And at the end of the day, this one it doesn't turn out to be a full trade because your target's up here and then eventually you're not stopped out of it yet, but you would have had to make a decision whether or not to cut the trade because like we said, if you're trading this method, you should shift into profit very quickly, this entire TBD system, and you should not really be hanging on to trades that kind of dance around your entry for days. So that's personal decision. But at the end of the day, that would have been the trade setup, would have been, okay, here we broke it, but we closed back above it very next candle, and then we created a higher low. The next step would be to get back above the point of control, the prior day's one. So this one right here, we did that over here, but we failed it and came back underneath. That probably that price action, if you were trading it this way, would have been probably your trigger point to exit, to be honest with you. Price action like that is probably where I would exit a trade setup like this, especially because it then hung around under the prior day's point of control for quite some time. Or the other thing I may have done, because this is US, I may have had enough price action to draw this current day's point of control and seen that it was above, and I may have given it another chance. So yeah, again, these are things you have to decide at the time, but this is kind of like just a general way to use both. Now, this is the perfect example and why I wanted to do this video. So as you know, I told you the 4 rules. If we open at the low of the day, we're looking for a bounce with volume or a break with volume, same the other way. But if we open around about the middle of the prior day, high and low of the day, price is probably going to do nothing that day. So because our high and low of the day is automatically marked with this indicator, we can do it very easily by just grabbing the Fibonacci tool from the low of the day to the high of the day. I have mine set just to show the 50% zone. And we can see here that the 50% of the previous day's high and low was at around 26,490. And if I go right across to where Asia opened, might be a little bit difficult to see. Let me zoom in. So if we go right to where Asia opened here, this candle, or not Asia opened, sorry, but the Asia gap started. This candle right here was literally at 50% of the high and low of the day. This is how you have a day off, guys. Is price opened in the middle of the range, and if that's the case, you can basically consider it a day off. Now, this may change. At the time that I'm filming this, it is a Friday and there is one more session to go in US. So there is a possibility that US does some sort of dramatic move for the Friday trap, and that's why, as I said at the beginning, you have to layer all these things together. You can't just go flat out, okay, I've looked at point of control, I've looked at high and low of the day, I'm out. You know what I mean? So we have to consider timing. Timing wise, it's possible to have something dramatic happen in US, but at the end of the day, this here here is giving a very good example of the third rule. I think it was the third rule, that if the day opens around about the middle of the high and the low of the day, it's likely that you're probably not going to have big moves that day. And at best, there's probably only going to be scalp trades. So if you really wanted to trade on a day like this, you would just be in and out on maybe 1 or 5, not even 5-minute time frames, probably like 1-minute time frames if you're interested in being a scalper. Or if you're not, you go do something else that day. But anyway, that's sort of more details on how to use the high and the low of the day. It's an amazing way to start your day. Now, before you do that though, you should zoom out to get a big picture idea of where you are. But once you've zoomed out, then you can come in here and go, okay, what was yesterday's high? What was yesterday's low? Where is price gravitating towards at the open? And is the volume coming in to break that, or is the volume coming in to reject that? Hope this video helped. Some weekend studying for you guys, and let me know if you have questions. Bye.